Welcome back to you for another yummy update, my baby dolls. So I'm going to cover for you something over this weekend just to keep you interested in what's going on. So I've got a post here from Raoul Pal just to keep everybody a bit, like bullish and optimistic and stuff out here, because really nothing has changed, friends, and like everything is still going along with the plan, even though we did see Mr. S&P 500 pretty much see you boom, 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 boom. Right, we did see that, but yeah, stock standard. I've also mentioned to you as well, friends, the VIX hit 45. It literally closed 45, which is a huge number. Remember the VIX, friends. The VIX comes over when the VIX is 25. That's a buy the dip opportunity. So when you see a 45, this must be a real big buy the dip opportunity. But they always gotta say be careful, because it could be the start of the bear market. But it is what it is. Okay, now, this post from all Power Friends, I want to give you this update. It's a macro update just to show you that everything's going to plan. Remember, there were a few things that I was speaking about with Donald Pump, who's trying to mog everybody, and I guess the goals of the policy. Okay, do you remember, friends? So we needed the US dollar down, old Dicky boy. We needed oil down to get inflation down. Okay, that's why Donald Trump was like trying to mediate Ukraine and Russia. And then when they come down, the interest rates can come down, okay? Simultaneously to that as well, China can print, yeah? And they can be stimulating for the rest of the world as well. Look what Raoul Pal said. People are yet to understand that we have a macro hedge fund manager running the treasury, not an ex-central banker. He deeply understands liquidity impacts and how to drive financial conditions to drive liquidity and how that in turn drives the economy and markets. So that's just nice, lovely speak saying like, hey, we've got people out here. He's basically saying what I've been saying. There is a plan. These people aren't as stupid as kind of like the other people make them out to be. Look at this. His entire strategy is to lower the three legs of financial conditions. US dollar, interest rates, oil, to goose up the business cycle ISM. Are you familiar, friends? Remember, you should be familiar with everything I've said. So what I'm going to do is just going to show you. So the first thing I spoke about was the US dollar. Well, the US dollar has been coming down. We put it on a daily chart. It has been coming down, friends. Remember, since Trump maybe does this little rally, that's what it did in 2017 as well, to repeat Trump's first year, and it has been coming down, and we've just had the kabonk, okay? So it has been dropping down. And remember, every point in here represents a big deviation down, all right? We started the year at 105. Yeah, man. So like, hopefully by the end of this year, we're like, even below, like we're going towards 98. So that's their goal. That's why Trump is doing the tariffs. The tariffs are like hurting growth, which means less demand for the US dollar. And then hopefully that gets mediated out here with the US Fed. So that's the first thing. So actually that's a tick, right? That's a tick. Now you might say, my friends Tommy, can we please speak about oil? Let's go have a look at oil, friends. Well, oil, if you have a look at it, also has been going down, baby dolls. This is the price of oil right here. It has been going down. Look at it, it's down to 62. But what I'll do is, that's actually a monthly chart. Look at this, man. Oil's been sinking like a rock as well. This is finally, look at that, man. It broke its level. It made this like level out here the whole way. I'll just show you now. This level around 65. Like it just always like bang, 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 bang. Always bouncing. And then finally it just was like, okay, it's time to just send it right on through. Now, here's the thing. Because he's with oil, because we're so used to the crypto volatility, we're like, oh, can you go down to like $2? But, it's not like that really. This is still huge, right? 10% drop. It's just showing you that these things are dropping down over time, which is exactly what you want to see. And hopefully this thing keeps going down. And if you want some reference points as well, when Donald Pump was last presidente, remember, he was president here. So oil was $50. Is actually his presidency. Its average price was 56. Yeah. So remember, before this, like he's dealing with an average price of like before this, right? 73. Think about this. He gets like, this is what President Biden was, right? And you got to think about, that's a big difference. That's an extra like nearly 40% higher cost. That's huge, right? So if you have, remember, oil, friends, I think it comprises, if I remember the number, oil, all your food, plastics, you sit on squeaky chairs, fluffy slippers, friends. There's a car that needed to deliver the fluffy slippers here to you. Oil, I think, makes up at least 40% of your weekly expenditure, the cost of oil. which is huge. Think about it, like if you have $1,000 a week of living costs, yeah, $400 is oil related, which means if the price of oil is up 40%, right? That's huge, friends. That means instead of $400, it's now $560. That's huge. In like a couple of years, you're like, dude, where'd this extra $160 go? That's why everyone's kind of getting squeezed, and that's why we've like pretty much like that extra income that's missing from everyone. That's been just using up space for your living cost fill up. So remember, we've gone to the US dollar going down, which is the opposite of up, which is what we want. We want the price of oil going down, which is the opposite of up as well. That's a double tick as well. And what else are we looking for? Remember, the last one is interest rates. Yeah, so what we can do is if we go to the view of trading, type in USO2Y. You know, it's one of my favorite charts, friends. Remember, it's a secret. This thing, pretty much, friends, the secret, right? It's super, super, super secret now. More secret than Mewtwo, okay? The US Fed literally just follows the US 2-year. That's what they do, right? If the US 2-year is pricing in something, they just follow it, okay? It's pretty much they bake it into the expectations. Now, unless something does it really, really, really wrong. Now, you see what's happening? As you look at it on the daily chart, you can see as the US stock market just started tanking, this thing goes down. Remember, if this goes down, it's pricing in more rate cuts in the future. If this thing goes up, like what it did a few years ago, it prices in hikes. That's why this thing was like just a freak shock move, right? So what you can actually do is look at the actual interest rate itself. Now, the interest rate today is 4.5% for America. This is saying 3.6. Almost, it was pretty much it was trading near 3.5. So this distance is 4 cuts, okay? 1, 2, 3, 4. That's 4 cuts. So that's pretty much what the yield curve is saying. Hey, in the next 2 years, at some point, we're expecting 4 rate cuts. So the market's priced in 4 cuts. It's pricing it in over time. And hopefully this comes down even more. That's I'm pretty sure that they want this to keep going down as much as they can, maybe even like lower, because obviously they can only cut if like the inflation and stuff is pretty much handled out here. Hopefully it can kind of swing down towards like a 3%. It's outside of our control. But just to remind you, man, in 2017, friends, the biggest bull market year of crypto pretty much of all time, interest rates were going up. That's right, up. We had 6 rate cuts, man. Rate hikes, sorry. Interest rates were going up. They put the rates up from 0 up to like 1.25. And then the yield curve was like pricing in at 2.5%. It was pricing in another 6 hikes going forward. Just showing you, so that's kind of amazing, right? But it is what it is when we look at this now. So you see now, it's all happening now. We're probably saying, sorry, if they're all working, why aren't we going up? Well, we're not going up because it is what it is. Cyclical timing, business ISM, you know, all of these, right? All of these, friends, they're building up into the ISM going up. So clearly, all right, this ISM has not, it's still 29 months down here, all right? It is not above 52 and accelerating. For whatever reason, man, it is what it is. So at some point, though, it will. There is probably a point where, you know, oil's low enough, old Dicky boy is low enough, and the interest rates are low enough for everyone to go, wow, I feel lighter now. You know, right now it's more like they're stepping on your neck. Yeah, that's what it feels like. It's like, man, I can barely breathe. I can barely breathe. I just need you off, mate. That's what it feels like. But when we start to fly, I think we'll feel it more. That's what we're working towards. That's what everyone's like nervous about, because they don't know, hey, is Trump going to like break the economy, or is this actually going to help out? It is what it is. We'll see what happens, you know. That's out of our control anyway. Thing is though, man, you really think this time is different? I don't think so, man. I know Uncle Bobby's bearish, friends. I've told you, I've got, you know, videos on it, like Uncle Bobby's. But then look, I just want to tell you something, friends. You're probably saying, Somi, there's only one man who can save us right now. Jim Cramer. Okay, Jim Cramer, friends, we've never seen him this bearish. All right? I promise you, check it out. Jim Cramer did an unprecedented bearish tweet storm on markets. He calls for a 1987 stock crash, even says, we were proud to sell. What? We were proud to sell. I'm going to show you these tweets, friends. This can only mean that it's time for up only again. Now, Look at him. So what we can do is, friends, we can actually read it from like, I think from down up as it goes, right? So surprised we can't get a short cover rally in case President Trump realizes that a Black Monday may not burnish a legacy. Friends, he's literally calling for Black Monday. So before I even show you the other tweets, you want to know what happened on Black Monday, America? Friends, there's documentaries on this day. Black Monday, the 1987 crash. Oh, man, this is the day, friends. This is it. Now, what's funny is, you see this chart? This just looks like a Bitcoin chart, bro. This is like, oh, you're scared of this pattern, dude. We go down 90%, dude. What are you scared about? It's kind of funny how you're still in crypto with me. Like, friends, like, no one can question the tenacity and the brassness of our balls and our ovaries, honestly, after everything we've been through. But, friends, this was literally the end of the world. So, look at this. There was a Friday here. Check this out. Friday, October 1987. It opens on Monday down another 4.85%, and then it drops in one single day 20%, and actually by the next day 23%. There's a documentary, friends. I forgot what it was called. It was on this day, and there's this old dude, some gray-haired guy, some like a boomer, and it's so funny. He said they started getting. He said everybody was like wiped out. Their friends, on this Black Friday, people ended their own lives, unfortunately. People like literally permanently squirted themselves with water pistols and bubble guns because this thing was just like everyone just wiped out. Like people would have their whole career because like, man, stock market losing. Like look at this, dude. It's down from in like a day or two, 29%. It's drawdown from the top. Look how fast that happened, 35%. Do you want to know what's also crazy about that? In the documentaries, after this stuff happened, the traders on the floor, like they went outside and they were looking. So I remember from the documentary, they're like eating lunch, like could barely eat, and they're looking around and like they're looking at everybody out there. Like all the business people and just people like walking around. This is in Chicago, the Cuck Mercantile Exchange around out there, and they're looking at them, looking like, oh, you're all dead people walking. You have no idea the Great Depression's about to start. Like society's about to crumble. And everyone's just walking by thinking like, move. Who's this loser? Just walking by them, and it's kind of funny. No recession came from it. That was the thing. It was an actual scare. It was just a wipeout. Now, you're probably curious, right? So, I mean, why was there a wipeout in the first place? Well, it was because we had the insane, I know we can't draw these. Let me just draw it out here. This is what the chart looked like out here. I'm just drawing it. So we had the insane sideways for 17 years, but then finally the stock market started going up and there was no real retracement. So the biggest retracement was just like this 14%. That's what it did. It went up and up and up and up and up and up and up. And this was just like a test. That's all it was. It was just like a massive test. But look at the stock market. S&P 500 went up 226% in like 5 years. Can you believe that? It went up a 3x in 5 years. And this was just like a retracement to come back down. That's what it was. But because when you're living it day by day, you're not used to that volatility. See, with us, we're like, oh yeah, it went up a 3x. You can drop 80% any day now. It's kind of funny when you think about it. So this day, friends, what happened was, this is extreme. This is what Jim Cramer is calling for. Literally another 22% down after that. He's like, that's why he's saying, Donald Trump, man, I remember on this day, a lot of people lost their lives. It's kind of funny when you just think about Jim Cramer thinking about stuff like this. Look, started short cover rally too early. No mojo. 1987 pattern in place. That's what he's talking about. He's talking about that. The gap. That's crazy, man. He's talking about 1987. Wow. So let me tell you something, friends. The Black Swan stuff, they happen so fast and so left field. No one's thinking about, 1987, Great Depression. They're not doing that. It's just like crash. What's going on? Like that. That's what it is, The fact that we're always pointing towards, Donald Trump, tariffs, that means it's pricing itself in. That's what it means, yeah. When it's like full fear, like, I don't know what's going on, that's the one that everyone loses their mind, right? That's the zombie virus stuff. Jim Cramer, like I said this morning, odds now favor the October 1987 pattern if we do not get constructive comments from Trump this weekend. Same damned pattern, that Thursday, that Friday, that Monday. If President Trump does nothing and if Europe retaliates, then the odds jump for an October 1987 replay. Look, I don't want an 87, but I traded during that period and I remember each day well. We knew to sell and we are proud we did, but we felt like idiots because the week before the crash was so bad and we were late to sell. Very interesting commentary when we go back and look at it. So pretty much what he's talking about is this is the day, right? This is the day. So what? This is Monday, right? So this is the thing. Wow. So this is what it actually looked like that. So you have, this was starting it, right? This was starting it. So it's pretty much people going like, oh no, the thing is down 6%. We're too late to sell. And then it gaps up, right? It gaps down like in the morning. Now it's down 12%. He's like, but we were proud to sell. We sold and we were proud. Oh man, oh man, oh man. This is wild. And guess what? You probably, look, nothing, friends, after this was the biggest up-only rally of all time. We actually started the internet tech boom. Do you know that? So there was, look at this. This was the bottom. And look what ended up happening. They literally started the tech boom after this. Bang, 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 bang. Look at that. Bang, 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 bang. This was the euphoria of tech stocks, Martles and Bartles and stuff out here. And then you have, this was the recession. Obviously, this is the GFC, the GFC out here. So looking at us, what's happening here, that's pretty much what he's saying. Oh, no, there's been a gap down. So what he's basically saying is like, oh, no, we're going to gap down here and then go like another one. Where would 30% drop take us? Oh, it would be around here to be something like that. Oh, no, that would be the pattern if it did that. But we're all talking about it. We're drawing it, bro. We're thinking about it. It ain't going to happen, dude. It ain't going to happen. We're drawing it. We're pricing it in. We're pricing in that fear. You know, look, I've been here 15 years, dude. Well, how many long? I don't even know how long. I'm just telling you, when everyone's drawing that doom, the doom doesn't happen. Okay? It doesn't. Okay? The markets hate uncertainty. So when no one's even drawing anything, they're like, what's going on? What's going on? That's the one that actually everyone loses the plot. Literally, it's literally that one. Okay? But it's interesting, right? Jim Cramer. But like, I showed you, man. Dicky boy's going down. Oil's going down. Interest rates are next. Like, subscribe, belly button, I'll catch you soon.